Goals that are not written down on paper are not goals, and a financial plan helps to achieve them. What do I want? Quit work and do what I like. At the same time, income from financial investments must cover all current expenses. This is a global goal. Achieving it will take considerable time. Now let's look at numbers. My current expenses are approximately $2,000 per month. This means that an income of $2,000 will cover expenses, but will not allow anything more. For example, traveling, paying for children's education, moving to a small house by the sea, and other fantasies can be limitless. But for now, I'll remove the house from the list and limit myself to multiplying current income by 2, and my global goal has taken shape in the form of an amount of $4,000. Of course, it can be increased, which I would really like. So there is a goal, $4,000 per month. Now I can determine what capital will provide it. Let's say I can invest at 5% per annum. Then the capital should be $960,000, preferably $1 million. But this amount just covers my needs. Monthly withdrawal of interest from account will decrease its real value due to inflation. To eliminate the effect of inflation, I will multiply this number by 2. It turned out to be $2 million. For me, this figure still looks unrealistic. I'll remember it, but I won't worry too much about it. Now, I'll move on to closer and more tangible goals. I love trading and hate physical labor. However, now I work physically and do not trade. I need to correct this. The goal is to accumulate enough funds so that trading on the exchange would cover my expenses and contribute to achieve my global goal. Capital of $10,000 will allow me to give up work and move on to active intraday trading. At the same time, I will take into account my previous negative experience. Do not put all eggs in one basket. Last year, I used Bodo Schäfer's approach. According to the principles outlined in his book Way to Financial Freedom, the first step is to get rid of debt. Then create a financial safety cushion, then start investing in low-risk financial instruments, and only then in high-risk financial instruments. I left my debts alone and went straight to the safety cushion. However, I did not accumulate a safety cushion after 1 year and didn't pass to the next stages. I saved money, but various unforeseen situations took it away. Now I have modified this approach. I do 3 things at one time: accumulate safety cushion, buy shares, put money to crypto exchange. The distribution of funds is as follows. I put 10% of my income into a safety cushion and forget about it. For the investment portfolio, I also use a slightly modified approach from Bodo Schäfer's book Way to Financial Freedom. I start saving with a small amount of $30 and increase it by 50% every month. I will do this until my income can provide the next increase. Further increases will occur as income increases. And for the crypto exchange, I use the lat effect. That is to put aside the cost of 1 cup of latte into a separate account. At the end of the month, I transfer this amount to the crypto exchange. The first stage of my journey to financial freedom will be considered complete when the funds on the crypto exchange reach $10,000. Subscribe to the channel, watch my successes, and try with me.